Are you unsure as to whether to start your business as a sole trader or a limited company? Now, this video covers the benefits of a limited company, the benefits of a sole trader, deciding which is right for you from the outset, and we've made a free downloadable tool to help you make an informed decision. And finally, converting from a sole trader to a limited company. Hi, I'm Tony D'Angelo of the Accounting and Tax Academy. Make sure you subscribe for real quality advice from real qualified accountants. Starting and trading through a limited company is certainly a sensible and tax-efficient option, but it should not necessarily be your default option. Operating as a sole trader does have its benefits, and we're going to provide you with a balanced evaluation of the benefits of both a limited company and sole trader beyond just the tax benefits. Operating your business through a limited company has many benefits, but as always, it depends on your circumstances, your business objectives, and financial targets. Nonetheless, the top 5 benefits, in my opinion, of a limited company are as follows. Tax efficiency. Yes, a limited company is generally more tax efficient as long as tax matters are planned in advance and the company's compliance and administration is done on time and correctly. However, in comparison to a sole trader, there is a certain profit threshold to consider before a limited company is more tax efficient. And I'll discuss this later in the video. Limited liability. A lot is made of this benefit, and rightly so. As a shareholder of a limited company, your personal assets are not at risk in the event of insolvency, or in other words, if your company is going bankrupt. But many lenders and creditors, i.e. people that your company owe money to, have clauses in their contracts that potentially can bypass limited liability and put your personal assets at risk. So do check this. Multiple shareholders and directors. If you are looking to expand your business in the future, bring in more directors to manage the company and share the responsibilities, then a limited company certainly provides this scope. Credibility. Now, in my years of experience, I have certainly witnessed many medium to large organizations insist a supplier is a limited company rather than sole trader. A limited company does provide you with a level of credibility, but be careful here. You're only credible if you have a trading history which is published on the company's house register. Legal name. Once you have registered your company legal name, then it is protected. Nobody else can use or infringe on that legal name. But do note, this is quite different from trademark protection of intellectual property, such as brand names. Now, in my personal opinion, sometimes I feel too much weight is given to creating and starting off a business as a limited company. Part of what is driving this is that it's so easy to create a limited company in the UK today and extremely cheap too. It's a bit like getting married. It's easy to get that marriage certificate, but more painful going through the divorce if things don't work out. What do you think? Put your comments in below. And that leads me to my 5 main benefits of operating as a sole trader. Flexibility. You can start your business as a sole trader, and then if it takes off, incorporate it. Keep your affairs simple and fees lower in the early days, and if things don't work out, you can wrap things up so much more easily and cost effectively. Greater privacy. With a sole trader business, your name and details are not in the public domain, unlike a limited company. Although there are ways of mitigating this as a limited company through using an accountant's registered office address, for example. Cheaper to run. The costs of accounting, compliance and tax returns are lower and affairs are simpler than those of a limited company. As a sole trader, you have to complete a self-assessment return by the 31st of January following the end of the tax year, 5th of April. Now be careful here because there is a section in the self-assessment return which requires mini accounts, so it's not always straightforward. Cheaper to close down. If your business simply does not take off or you've come to the end of your business's journey naturally, then it's quicker and simpler to close down your sole trader business. Tax neutral. If your profits are in the region of £20,000 or lower, then there really isn't too much difference between a sole trader and limited company with regards to taxation. There is Class 2 and Class 4 national insurance to pay as a sole trader, but then there is also Class 1 primary and secondary national insurance to pay if you take an optimum director salary through your limited company at the personal allowance level and do not qualify for the national insurance employment allowance. There's no right or wrong answer here, and a lot depends upon what stage of your business journey you are at, your business objectives, and financial goals. What you need to do is make an informed decision. I mean, I have witnessed somewhere in the region of 40% of new entrepreneurs jump into creating a new limited company and all the associated company's house and HMRC registrations without much thought or planning, and eventually end up dissolving their businesses due to non-activity or things just not working out. And then they get surprised at the fees and time it takes to shut down the company. We've done a video about how to dissolve a limited company, and spoiler alert, it's not really that straightforward. As I mentioned earlier, it's become easy and cheap to start a limited company in the UK, and don't get me wrong, that's not a bad thing at all. Many formation companies offer nice freebies and incentives for you to create a limited company in 3 hours or less, but you should always pause and think, is this the right option for me at this stage in my business journey? Just because McDonald's offer your kids a free gift and cashback with a Happy Meal does not necessarily mean it's the right type of food for them. And by the way, I have nothing against McDonald's, it's just an analogy for me to use. Now, if you're thinking, but Tony, I'll just make my limited company dormant, allow me to enlighten you to the official definition. Your company is considered dormant by Companies House if it has had no significant transactions in the financial year that you'd normally report. Significant transactions do not include filing fees paid to Companies House, penalties for late filing of accounts, money paid for shares when the company was incorporated. So in other words, if you have made any significant transactions in a company year, your limited company cannot file dormant accounts. And they've pretty much told you what is not significant here, so anything else could be classified as significant. If you're testing your concept or the market, then perhaps a sole trader vehicle is a feasible option. A lot is made of personal risk and so forth. But if you're dealing with manageable amounts you can afford to lose, then it's highly unlikely your house, car, or your kids will be repossessed. Take a few minutes and think it through first. We've created a free limited company versus sole trader decision tool to help you. You can download it by clicking the link in the description box below. It's a simple form of 10 questions, and depending upon your answer, you either score a point for sole trader or limited company, and which option gives the highest points total provides you with a steer in making a more informed decision. And herein lies the beauty of a sole trader. Yes, you can incorporate it, or in other words, convert your existing business into a limited company. Any assets, contracts, customers, cash you may have in your sole trader business gets incorporated into a limited company. And more often than not, you will only do this if you start gaining traction with getting paying customers and building an actual business. But a word of caution here, there is a process to this, and I strongly recommend that you use the services of a reputable and trustworthy accounting service who has experience in incorporating sole trader businesses, as things like goodwill, capital gains tax, and incorporation relief are involved. And above all, the timing of incorporation can make a difference. So let's recap. If you're unsure as to whether a sole trader or limited company is right for you, then pause and plan. Take just a few minutes to use our sole trader versus limited company decision tool. It will facilitate some thought and help you make a more informed decision. If you're basing your decision just on tax efficiency, then you have the option to start off as a sole trader and then incorporate into a limited company when your business is earning a profit of around £20,000 per annum. Now, there are some variations to this, so do use this as a guide threshold only. After some thought and planning, you may decide that starting a limited company from the outset is the right decision for you and your business for reasons other than tax planning. So, for example, securing a legal name you want, or perhaps your clients are insistent they only want to deal with a limited company. And there's nothing wrong with this at all, so long as you've made a balanced and informed decision. Finally, no two scenarios are the same, so remember, this is just general advice. I hope this video has helped you understand some of the benefits of a sole trader and limited company in a more balanced way, and has taken you one step closer to knowing your numbers. As always, let me know in the comments your thoughts on today's video, or if there are any topics you'd like us to cover in the future. Finally, be sure to like and subscribe, as this really does help us to get our content out there. This is Tony D'Angel for the Accounting and Tax Academy, and as always, thanks for tuning in.